Hello everyone, Nick Shaheen here looking at Novavax again. I did a video about a week ago, maybe a little under, and had some comments, and then they kind of held true. I said there was an alert, but then we looked at the lower time frames. I said there is some resistances that I would be not chasing, and in fact I had a hand drawing on there that kind of forecasted how price action will do, and this was the first part of it. If you want, I can bring it in here 1 second. Boom, magic. It's this section right here. So this meant when I drew this, I can't draw on it, I saw resistance. So even though I had a trigger to chase, and I was like, wait, if I was an active trader, I would see that there's onuses on the bulls to take it out. So I want to see them take it out and then maybe test it one more time for footing to go. So that is proving correct. So it's not the end of the world. It's just normal price action. So I like the fact that it's ping-ponging at least. I would not want to have this be lost, because must hold. Otherwise, we won't talk about the consequences. We won't talk about them. Conversely, the upside consequences are great if they can take out said resistance. I have the trigger a little bit higher because I don't trade it. I'm just helping out a few friends. It is a zone of resistance and several lines of it. But I wouldn't start chasing until at least they beat these two. This one, and I expect some resistance here and here. So onus is on the bulls to take it out. So I have a feeling that this one will move in just like bursts, big bursts, up or down. Because by definition, the biotech stocks like this are headline. They're prone to headlines. They live and die by the headline, really. So if you're not scalping intraday, then you have to either make your bet and hold to it. I wouldn't add to a long bet that's losing money. So the so-called averaging down, that's definitely not a candidate for me to average down on, because it could just disappear. How so? Well, let me pull up a weekly to give you a visual of how so. So up here, I'm pretty sure nobody saw this coming. And just like down here, nobody saw that coming. So if you have conviction in stocks like these, it has happened before. I believe I bought on this dip. It was under $1. I bought when it was 80 cents. I bought a $1. It may have been this drop. A $1 call. It was a leap call, and it made money, but nowhere near as much as I would have had it done that. There was no COVID here to save it. Remember that this stock has reverse split, whatever it was, 20 to 1. That's why these prices are super high. They're actually, it was like maybe $12 or $13 up here. So back to what's going on now. It's normal price action. In fact, let's drill down to a 120 minute. It's a push-pull around the baseline of this. So in actuality, one can argue that they lost the neckline right here at this neckline. I can draw it. It looks like an inverse cup and hold, cup and handle. And arguably one can say maybe it filled most of it. So there's no need to fill it all. So I wouldn't start shorting based on that pattern. And now the problem is they're coming back to the same neckline area. This to see, and this fail, to see if they can reclaim it. That's the same zone that I was talking about. So the bulls need to reclaim it, and then they would draw a cup and handle, which is the opposite of what just happened. So technically, maybe that would help us out in a stock this wild, like something like this. I call this a ladybug, and it grows legs if they lose the neck. Here, it's the opposite situation. Cup and handle, a dead ladybug. It grows legs. So if they take out this failing point, this let's call it a neckline, a place where they fought before. Let's say they come up here, they go up, and they test it for footing. They have the chance of doing this. This is a big problem. Remember in my last video I discussed what this is. This orange line is a mathematical calculation. So it's not me drawing a line. It's where they loved the stock. In fact, how interesting is this? I wish they would draw a lighter color orange for the second most important line. You know where it would be? Right here. Look here. This orange bar right there and this orange bar right here. This is the volume at this level and at this level. So every time they get here, both sides love it. Buy, sell, buy, sell, buy, sell, both. Bulls and bears. When it gets to here, bulls and bears love it. So in this case, this is magnetic, so I can't tell if it's support or resistance. It's like hitting it and stuck. But if it's rallying and it hits one of these lines, it's going to be a resistance. If it's falling and it hits one of these lines, it's going to be support. In this case, it's stuck here because everybody wants to buy and sell it. It can't break out. And if it does break out, it's going to hit a wall here, technically. So if they break out, I expect it to do it in a zigzag because it's going to hit it, fade, hit it, and try to take it out again. So the trade is still very emotional. I don't want to root against the vaccine, but these guys, they've never had a vaccine, the way I understand it, go to market. And on top of it, the coronaviruses, we've never had ever from anyone has ever successfully delivered a vaccine to any coronavirus. Maybe because they haven't tried before, that's what they say. I have to take their word for it. Because the alternative would be just everybody being crippled by this stinking virus forever. Personally, I'm not scared of it, but maybe I will when I get hit with it. So it's a tradable stock. If it's an investment, realize that it's a coin flip investment, so I would not add to my longs on dips. I would add to my longs on dips in a sure thing like Apple or Google or Facebook or Amazon. But on stocks like this, where it's a binary outcome, they either have it or don't have it. And even if they have it, they either make money or don't make money. I would not add to my longs on dips with this one. Nothing against the company itself. Nick signing out.